everyone is shorting Bitcoin. So I'm doing the exact opposite. Today we're going to talk about something that most people in crypto get completely wrong. And it's something that if you understand it properly, you completely change how you approach this market. Right now across the futures market, traders are heavily positioned in short trades. In simple terms, huge numbers of people are betting that crypto prices are about to go down. And not just slightly down, they're betting aggressively that the market is about to fall. When you look at the liquidation data and futures positioning, you can see it very clearly. There are massive short positions stacked above price and very few longs underneath. In other words, the majority of leveraged traders right now are positioned for the downside. So what am I doing? I'm doing the exact opposite. While most people are shorting, panicking and expecting more drops, I'm quietly building low leverage long positions across Bitcoin, Ethereum, XRP, Doge and Solana. And before people go wild in the comments, let me say this clearly. Could the market still go down from here? Of course it could. Crypto markets are volatile. Nothing is guaranteed. Price could absolutely drop further, and maybe it will. But here's the difference between how most people trade and how I approach this market. Most traders are trying to predict the next move perfectly. They want to enter at the absolute bottom and exit at the absolute top. And when price drops, they panic, sell and flip to short. Do not trade like that. I position myself in a way where I can handle the volatility. Let's talk psychology for a moment, because markets are driven by human emotion. When prices are pumping, social media is full of rocket emojis. Everyone is suddenly becoming bullish. People are telling you Bitcoin is going to $1 million. Your taxi driver starts talking to you about crypto again. And that's usually when people start buying aggressively. But here's the problem. By the time everybody feels comfortable again to buy, the prices have already moved. The smart money accumulated earlier when people were scared. And right now, sentiment across social media is in fear mode, doubt and frustration. People are convinced the market is finished. Every bounce gets sold and every small drop causes panic posts. And that fear is exactly why I'm accumulating through this section. Because historically, the best opportunities in crypto come from when people are scared to buy, betting against the herd. Here's the truth most people don't want you to hear. In leverage trading, the majority of traders lose money. Not because crypto is impossible, but because people trade emotionally. They chase pumps, they sell dips, and they over leverage, and then they follow the herd. If most people are positioned in one direction, statistically speaking, that direction often ends up being wrong. So when I see overwhelmingly short positioning, I start thinking differently. If prices move higher, all those short traders get squeezed. Their positions get liquidated. And when shorts get liquidated, they are forced to buy back into the market. That forced buying pushes prices even higher. This is what we call a short squeeze. And it happens over and over again in crypto. My strategy is low leverage, long-term thinking. Now let's talk about how I approach this practically. I'm not going to go all in with crazy leverage. I'm not risking everything on one trade. I'm building low leverage long positions gradually. Why low leverage? Because it gives me breathing room. If price dips, my position doesn't immediately get wiped out. And here's the key part most traders usually ignore. If the market drops, I don't panic, I add to that position. By adding at lower prices, I lower my average entry price. That also pushes my liquidation price further. So instead of being scared of dips, dips become opportunities. Most traders fear the red candles. I look at them as discounts. Another tool that I always watch is the market sentiment, especially the fear and greed levels. When markets are greedy, people feel invincible. Everybody thinks that price could only go up. But those are usually dangerous times to enter big positions. Right now, sentiment is back in the fear or extreme fear territory. People think the market is cooked, influencers are bearish, and traders are frustrated. And historically, fear is where long-term accumulation happens. This is where investors quietly build positions while the majority sit on the sidelines or panic. Then months later, when price recovers, people say, how did I miss that move? They missed it because they were too scared to buy when the opportunity was there. Let's be honest, most people come into crypto wanting quick money. They see stories of people turning accounts into huge gains. They jump in with leverage expecting instant success. But trading doesn't work like that long term. Consistency comes from strategy, patience and emotional control. If you consistently chase what everybody else is doing, you'll always be late. And this cycle repeats again and again and again. Now, I need to stress something important. I'm not saying price can't go lower. I'm not saying this is a guaranteed upside. Risk always exists. The difference is how you manage that risk. I build positions slowly. I don't bet everything at once. I keep capital available in case the market dips further. So if price drops, I'm not trapped. I'm prepared. Most traders go all in too early, then panic when the price moves against them. I avoid that mistake. Let me make this very clear because some people always misunderstand. I'm not telling you what to do. I'm not your financial advisor and I'm not your dad. I'm simply telling you what I personally do and what has worked for me over many years through bull markets and bear markets. I've used this exact strategy through multiple cycles and made money. I've been buying when other people are scared, reducing risk through position sizing, taking profits when markets get greedy, and repeating the process. That's how I've built consistency. And if you want to understand my exact approach, the way I manage risk, build positions, and navigate volatile markets, I've put together a completely free crypto course. No paywall, no hidden fees, no nonsense. It's called the Crypto Liftoff, and it walks you through the fundamentals of how I approach trading and investing. If you want to check it out, there's a link in the description, or you can head over to cryptowolfpack.co.uk. It's there for anybody who genuinely wants to learn, and it is completely free. And if you're looking for a solid leverage trading platform, check out Bitchinix. They're currently running an exclusive campaign where new users get up to $2,000 in trading bonuses, plus fast-tracked access to VIP level benefits. If you're going to trade anyway, you might as well use a platform that gives you some advantages when starting. And remember, only people using my link get these exclusive bonuses. There's a link in the description. So let's recap. Right now, most leverage traders are short. Market sentiment is fearful and social media is bearish. And I'm doing what I've always done in these environments. I'm building low leverage long positions gradually. If price goes higher, great. If price dips, I'll add more to improve my entries because I'm not trying to predict the exact bottom. I'm positioning for long-term recovery that always follows after fear phases in crypto. Markets move in cycles. Fear turns into optimism. Optimism turns into greed, and greed turns into panic. And panic eventually turns back into opportunity. The traders who survive long term are the ones that learn to operate when emotions are highest. And right now, fear is high, which historically is exactly when opportunities appear. If you found this helpful, please drop me a like on this video, subscribe if you're new, and let me know in the comments. Are you accumulating right now, or are you waiting for lower prices? And as always, stay safe, trade smart, and I'll see you on the next video. And remember this, the strength of the wolf is in the pack.